Welcome to Layn University. My name's Conrad Layn. To Layn University. My name's Conrad Layn. I'm a Turo car host. I own 30 cars that I rent on multiple platforms. Hire a car, get around, avail. I also rent independently to movie studios and Turo, of course. I'm a Turo car host. Been a Turo car host for over 3 years now. And I share how to earn 6 figures and 7 figures and beyond. If you want to learn how to earn 6 figures, I don't care if you have no cars, one car, if you're just starting off, or if you're wealthy, or if you're like me, you have multiple cars and experience. I don't care what the case is. This is going to benefit you. Even if you don't own a rental car, if you just have a car to use for business, you're going to want to pay attention to this and learn this tax code and run it by your CPA. Don't steer litigate me. I'm not your tax person. I'm just sharing what the wealthy have been doing for years. And you might want to run this by your tax person because oftentimes I meet Turo hosts that they don't even know about this. So you spend money on a car, right? Did you know that IRS tax code allows you to, even if you finance a car? So yes, if you buy the car outright with cash, that's great. You can use this tax code. But even if you finance the car, finance to own the car, if you lease the car, this doesn't work. That's a different strategy. This doesn't work for that. But if you finance a car, and like you own the car, you buy it with cash, or you finance it, like say for 60 months or for 72 months or 3 years, whatever the case is, you can actually write off the car first year. So say you spend $14,000 on the car, $20,000 on the car, even though it's financed, you can actually write off the car, get that back, and the IRS will reduce your taxes. And you pay $0 taxes. This is how wealthy people are winning. They use this tax code in real estate and many other industries, but typically real estate. The only difference with real estate is you have to use something called a cost seg. But the thing is, with a cost seg, you need an engineer, and it's a little more complicated. With a car, it's already a depreciating asset and has a short shelf life of only up to 5 years. You can depreciate it first year. Residential real estate, you have to actually write it off within 27 and a half years. If it's commercial, 39 years. But the cool thing with the bonus depreciation and with a cost seg, you're able to write it off like first year if you want, or 5th year, 10th year, depending on what the strategy you want to implement. But I digress. The point is, if you own cars like me, if you're a tour host, if you're a hire car owner, if you're a get around, shoot, if you're a dealership, shoot, if you're a doctor and you have a car using for a business, if you're an Uber driver, a Lyft driver, I don't care. If you use car for business, as long as the car is used more than 50% of the time, you could use IRS tax code 179 to write off your car first year and get that beautiful tax save. Doesn't matter if the car is new or used. Doesn't matter as long as it's financed to own or if you bought it outright yourself. Really excellent strategy to do this, because what you're going to essentially do is you'll be able to buy cars and depreciate them and reduce your taxes and pay zero. And this is how you keep more money in your pocket. That's for vehicles under 6,000 pounds. Now, vehicles that are 6,000 pounds and under 14,000 pounds, the same rule applies. You can actually get bonus depreciation. You can also write off the car first year or 1 through 5 years, same thing. If it's over 14,000 pounds, that's when you start writing off big time SUVs or big time limousines or jets. Jets and airplanes are called buses, actually. If you travel around the world, you realize they're actually called buses. They're actually considered a vehicle. So like Grant Cardone, Donald Trump, different people, meet Kevin, if you guys know who he is, they bought jets, but they're able to write these jets off first year, second year, and it gets even more complicated and beautiful for you, where you can start getting paid forward. What this means is that, for example, say you earn $100,000, right? Every state and what your tax bracket is could differentiate. But let's just use a hypothetical. You have 100,000, right? Say you earn $100,000. Say you had to pay taxes of let's say 35%. So that means right off the top, you're losing 35,000, right? So that's 35,000 you have to pay to Uncle Sam, IRS. Okay. This is the cool thing. Say you buy 1 car, 2 cars, 3 cars, 4 cars. Even if you finance them, if you just put $500 down payment or no down payment, it doesn't matter. You could write off the cost of that car. And so let's say you have one car that's worth, say you have one car that's worth 10,000, another car is worth 10,000, another car is worth 8,000. Let's say another car is worth 10,000. You have 38,000. That's 3 cars worth 10, 1 car worth 8,000. You follow me? So if you actually write these cars off first year or 1 through 5 years, that's 38,000 you just rolled off, but you had to pay taxes of 35,000, right? You reduce the taxes. That means you don't have to pay the taxes because it's been reduced, and now you're owed $3,000. Do you see the magic of this? And if you own 30 cars like me, or 100 cars or more, You see how this starts becoming a fun game. This is what people do in real estate. Cars are so similar to real estate, but without what less barrier to entry. If you know how to play the game with Turo, you can become so wealthy. Like the amount of money you can make here is ridiculous. Again, I'm just a guy on YouTube. I'm just your friend. I'm not your tax person. Don't really get me. IRS is a complicated piece of literature that is overly complicated, but it's very simple at the same time, and it's constantly changing. Most of the complication comes because rules change. So like, for example, last year there might have been one rule, but this year it changes to a different rule. So you always want to constantly check with your CPA and learn to read the IRS tax code. So again, that's why I say I'm just sharing what's true right now, but you want to do your absolute best to run this by your CPA, but bring up IRS tax code 179 and bonus depreciation. And that's how you're able to write these cars off. And if anything, the IRS will owe you money. But most Turo hosts, I'm a par host, and I've been to a few summits, and I meet with different hosts here and there, all throughout the states and different states. And a lot of them just buy cars. They're not very good at with their taxes. They're not good at organization. And that's just anyone. Most businesses suffer with this. But you have to become, so I don't care what industry you are in, if you have a car you're using for a pizza, if you're a Lyft or Uber driver, if you're a doctor, physician, if you're a nurse and you're using your car for business, it's much more advanced than just trying to take off the actual mileage or taking off gas. That's very basic. IRS tax code 179 is what wealthy people are playing, where they're able to offset the cost, get a tax deduction, and actually have the IRS owe them money, or they pay so much that they have so much the bonus depreciation. It's called being paid for, where they pretty much will not owe taxes next year, depending on how many cars you have. So you just become this game. You keep buying more and more cars. Very similar to real estate. But again, please do your own research, do your own due diligence. I'm just your friend on YouTube. I just want to share IRS tax code 179. And that's how Grant Cardone, meet Kevin, Donald Trump, Warren Buffett, and the most wealthy, affluent people, Jeff Bezos, Elon Musk, they're able to write off these vehicles, these jets, these planes, and pay $0 in taxes with bonus depreciation by buying cars, assets, and real estate. So anyways, like, subscribe, share. My name is Conrad Layn. If you felt you learned any type of content or learn anything from this content, please feel free to hit that button, that bell down there, and subscribe to the channel. Motivates me to make more videos like this. I'm going to share more tax codes. I'm going to share more strategies. And if you're getting to the point where maybe you're just starting off, or maybe you're in the middle where you've been on Turo for a while, or you've been renting cars for a while, or maybe you own a lot of cars. Maybe you own 30 cars like me, or 40 cars, or 100 cars, 200 cars, or one car. It doesn't matter. We all want to make more money. We all want to keep more of our money that we work hard for. You don't want to keep paying it to Uncle Sam if you don't have to. Just play the game. Do not evade taxes. Do not commit tax fraud. I'm not saying that. I'm saying learn the game like wealthy people do. So instead of complaining about wealthy people constantly getting away from taxes, play the game as well. That's about it. Like, subscribe, share. Carly out. Peace.